So your pedophile uncle gives you $1,000 for helping him around the house. And then you immediately think, what am I gonna do with this money? A new Nintendo Switch? Thailand lady boys? Or maybe even the down payment on your new financial empire? That's what we'll be talking about today. I'm the information enthusiast, and on this channel, we talk about finance, facts, and fiction. FFF for short. Easiest cash you will ever make is in ETFs, and today I'll be giving you 5 of them you can invest in. Now without further ado, here are the 5 best ETFs to invest in. VFV. VFV is one of the most popular Vanguard ETFs. This particular ETF tracks the well-known S&P 500. If you don't know what the S&P 500 is, it tracks 500 of the biggest companies in the United States. It is a very diverse ETF, as you can see here, mostly focusing on information technology and healthcare. The MER, or Management Expense Ratio, is a very low 0.09%. VFV has a 1.35% distribution yield as of the making of this video, and is paid out quarterly. This ETF is a Canadian ETF, but can also be bought in the US. This ETF is very simple and absolutely does the job. Now number 2, VOO. As well as VFV, this ETF tracks the S&P 500. But you might ask, what's the difference between VFV and VOO? The only difference is that VFV is backed by Canadian dollars and VOO is backed by US dollars. So you can think of it as an investment into the currency. For example, if you buy VFV and the Canadian dollar goes up, you can sell for more US dollars than you bought it, and vice versa. The expense ratio is 0.03%, divided yield is 1.62%, and it's paid out quarterly. Now number 3, VTI, an American ETF. This one aims to track the entire US market, which means it is exposed to high, mid, and low cap stocks. This ETF is more diverse than the 2 previously mentioned. The expense ratio is 0.03%, the dividend yield 1.59%, and is paid out quarterly too. This stock is the best of all worlds. Number 4, VDY. VDY is a Canadian ETF that focuses on companies that give high dividends. Thus, VDI has a whopping 4.2 annual dividend yield paid out monthly. Slightly higher 0.22 MER. As seen from the market weightings, this ETF heavily relies on banks. 55% of the stock is financial companies alone. This is a more volatile option compared to the others, but it should not sway you. It has had an overall upward trend throughout its lifespan. Now on to number 5, VYM. Similarly to the last one, VYM is an American stock that tracks companies that gives high dividends. It has an MER of 0.06% and dividend yield of 2.99%, which is paid out quarterly. This stock is more diverse than VDY, but a lower dividend yield. Now those are all the 5 ETFs I have for you guys. Remember to always do your own research and check out this video to find out the best investment strategies. Now before you go, I ask you to invest in our channel by clicking that big red subscribe button. That's all I have for today, folks. Have a great day.